morning. It is Wednesday morning, the 4th of April, 2018. This video is for public consumption. I thought I'd do a little bit of an update. I know I did a rather long video last Friday, and a lot of people looked at it, but it was like 20-something minutes long. This will be decidedly shorter and sweeter. I'm going to walk through really quickly a comparison of the Greedometer sequence right now and what was seen pre-crash 2007. Same thing with the mini Greedometer or tactical Greedometer sequence, what's been seen this year and how it looks sort of similar, but substantially, if I'm honest, scarier than what we saw in 2007. All right, let me see. I should probably point out that for further training and reference, there's the Greedometer.com website. There are, if you go here, examples of videos and lots of insight into how the algorithms were working before previous crashes. And what do you know? It's even this one here. Anyway, this is a really helpful Greedometer videos. This is a very helpful page. There's lots of insight into how to use the algos. This is a very, very, very important chart, and read that page and you'll see why. This is a video of the 2007 to 2009 crash, and other videos of instances applying the algorithms and how they adapt to what central bankers say and do. Very interesting. Anyway, so for now, make that go away. Back to our show. So this is the current Greedometer sequence. It was born here with the Trump tax cuts being threatened, and then all threatened and threatened and threatened till finally delivered. But this is the warm-up or pre-crash. This data is current as of and through last week, and how we make use of this is we will pull in the Greedometer sequence from 2007, 8, 9. Let's make this a bit bigger. There we go. And again, if you've seen the other videos, sorry, this is going to be repetition, but how you use the Greedometer sequence is this. You look for the Greedometer values to, well, exceed 6,500 RPM. 7,000 is particularly risky and worrisome. Anyway, look for a big drop, and for the next peak in Greedometer readings to be noticeably lower than the previous peak, while the stock market is retesting the same peak. Okay, so in October of 07, it was 1.5% on a weekly close basis. It was 1.5% higher than it was in July. For all intents and purposes, the same. Greedometer, no, way lower. So this is the telltale sign that this is a crash initiation point. Okay, and that's how you use this system. It's very slow moving. You can't get a lot more from market timing out of this algo. It is very, very slow moving. But one of the things I want you to take away from this is there's about a 2,000 RPM drop in Greedometer readings right here during this 10% SPIX drop and heading into the sucker rally. This was about a 2,000 RPM drop, right? So what would I expect now? Provided central bankers sit on their hands this week and potentially next week, provided central bankers sit on their hands, and we haven't seen that in 3.5 years, if they sit on their hands for the rest of this week, we will see Greedometer values trough probably 2 weeks or so from now with about a 2,000 RPM drop from there, so somewhere about like here-ish, okay? That's this week and then the next week and the next week, so somewhere in here. That's how we use this system. Now I'm getting a bit ahead of the game because you can't use this system or these algorithms with low risk until three things have been seen. So in order to talk about that in detail, I will look at the tactical or the mini Greedometer, which is somewhat tactical. Now there's a lot of information on this chart, so I'll talk to it briefly. Mini Greedometer. So mini Greedometer values are in red. Okay, SPIX is in blue. Again, weekly close basis. How you use the system is you need a birth point. Got that. You need a first baseline point. We don't have that yet. That wasn't it. This was not the first baseline point. Okay, as it says right here, this cannot be a first baseline point. Why? Because of this. PBOC contributed, I think it was like Thursday morning, not the week before last week, because that's last week and that's the week before. So the PBOC contributed and basically went across the board and bought SPIX futures, contracts, you name it, everything, okay? It played in the treasuries, the Forex, and global equities markets and bought about half a day of happiness. Ultimately it rolled over. But it did monkey with the system, and it takes about a week and a half. So that week and another week or so for the mini Greedometer to bake in any sort of surprise intrusion like that. But that can't be the bottom. It can't support a baseline. It must be lower than that. And thus this week which is, well, here not shown. I'm anticipating that, again, if nothing new and yummy is surprising comes out from central banks this week, that we will likely see the first baseline point. We haven't seen one since October of 2014. That will probably happen this week, at the latest next week, probably in time this week and next week, and in value in this kind of a range. That's why my estimated baseline is this. So once we have that, that'll be awesome. We'll have the birth point, we'll have the first baseline point, and for all intents and purposes, we'll pretty much have a lock in the sequence, because the top line will be basically an extension up just past that. So it'll look something like that. So with all that being said, yes, this means that necessarily this forecast as it stands right now would call for the SPIX to plummet from the late January peaks in the high 2800s for all intents and purposes, 2900 or so, through to about 800. Yes, you heard that right. Something will get the blame for it, don't worry. Maybe it'll be a trade war, or God, it doesn't matter. There's always a reason, there's always an excuse for why something crashed. There always is. What else can I tell you? You can pause and rewind. Oh, what else? I expect that, so because this is sufficiently scary and inconvenient, at least one central bank, probably the Fed, probably Mr. Dudley before he leaves will exit, and before he exits in June, probably will do a surprise intrusion, dropping some sort of sugar bomb, probably threatening no more rate hikes, or maybe a new QE program, or maybe helicopter money. I don't know, but it'll be sufficiently pretty yummy, and that will necessarily warp the sequence flatter, which means the topping out process will last longer. So instead of 2890s, it'll go to low mid 2900s. Okay, and the baseline will get warped flatter, probably to something about like that. We'll see. And a top line will get pushed up and over to about something like that, pushing the end of the crash to something out here, summer of next year. And because that's still probably too inconvenient, probably our good friend Bullard, potentially Mr. Powell, will intrude again this summer, and again, probably no rate hike. Threaten everything's awesome, but not awesome enough, so probably no rate hike, and probably warp the baseline flatter again, pushing the end of the crash out further so that it looks a lot like that, the top line and baseline, and the end of the crash is somewhere around here in time, somewhere around here in value. Okay. For reference, this is the baseline of the 2007-8-9 crash. That's the pace of the crash. So you can see, well, this is quite a bit steeper, isn't it? Yes, that means quite a bit faster crash. So for comparison to what we saw in 2007-8-9, well, there was the birth point. There was the first baseline point. All right. So we had that summer drop, 10% drop, and then a sucker rally back to October. Well, nice big drop here in mini Greedometer values. We set the baseline, back up the top line we go, and on with the show, right? This drop was blamed on Bear Stearns. Yeah, whatever. I don't care, okay? Baseline point back up here. All banks start blowing up and falling apart, and so the Fed basically launches QE1, here in October, prevents the baseline from being seen. It would have been seen here. SPIX plummeted to 800, and look at the mini Greedometer value here, right? It was rolling over, would have dropped to the baseline. Which means this 800, nowhere near where this thing would have troughed without the Fed initiating QE1. This probably would have seen a SPIX drop to about the 600s. Would have come up for air again in another month and then plummeted to about the 400s. But that was really inconvenient. Well, I'm saying it's inconvenient. That's kind of like, it's not very nice. In reality, the U.S. banking system and the European and Japanese banking systems were insolvent. Well, they were. Okay, that's why at least on this side of the North Atlantic, the FASB intruded to change valuation metrics and accounting systems for banks so that they wouldn't have to value the assets on their balance sheet that were trading at about 15 cents on the dollar. They could revalue them instead of mark to market, they could revalue those assets at mark to what their models say. Their models would say, hey, these things are awesome, they're worth 80 or 90 cents on the dollar, so what's not to like? Boom, into the crash. But anyway, that intrusion warped the sequence flatter, the baseline a little flatter, pushed the top line up and out. But that wasn't yummy enough, so that's why the FASB had to intrude in March, and the Fed had dramatically had to increase the size of its QE1 program. Again, you can see here mini Greedometer values plummeting. This was the intraday 666, close the day I think 676 on the SPIX. Say that 3 times fast. If you're wondering, hey, that was a bad crash, and it burned itself out, and everything was awesome. Yeah, it was a bad crash. 57% in 17 months. Yeah, bad crash. Did it burn itself out on its own? Hell no. Okay. Um, as you can see here, you basically, the SPIX keeps dropping every time until it hits the baseline, the mini greedometer baseline. Then it inverts and goes back up, and that's how you use this system profitably, long and short. It's a decidedly less profitable system when central banks keep intruding and spilling coffee on the map, like they did here with QE and, well, a whole bunch of times ever since. Okay? So anyway, in short, we're in this kind of a situation right now. Where we are right now is we're looking to set this baseline point and thus the pace of collapse. And yes, if you're wondering, this, as I mentioned earlier, this the slope of this baseline is way flatter than this. And there's the baseline of the 2007-8 crash right there. So yes, no secret, I'm expecting the SPIX to plummet this week. Close a week, probably close in the low 2500s. To be fair, I'm getting ahead of myself. You can't really, I don't know that the slope is here. It could be a little flatter, could be a little steeper. I don't know yet. I have to get that first baseline point. When I have that, we're good. Until then, playing with a bit more variability. But it would be absolutely reasonable to expect the SPIX to close this week into probably the low to maybe mid 2500s. Intra-week or before that, you know what? It could absolutely plummet through that, and there's a wall of money in the low 2500s, and just a pile of stop losses getting that are nervous, that'll be triggered in the low 2500s, around 2520s, 2530s. That'll get triggered this week. So if nothing else over the last several years, you probably very painfully learned that if you have a price-driven or a static market timing system, you've been repeatedly steamrolled by stop hunting algo bots, and these algo bots are going to be absolutely drooling at the prospect of that wall of money being forced to cover in the low 2500s this week if it gets triggered. So don't be at all surprised if there is a massive 1 hour or something like that elevator drop. If we drop through that I don't know, 2520 or something like that, somewhere down there for about an hour or so into the 2400s, and then come after all those millions or billions of dollars have been forced to cover, and then having to turn around the other way. Hey, this is the peril. If you're going to use a price-based system, you are cannon fodder. And just a reminder, price is not an input parameter to this algorithm, and it's not an input parameter to the Greedometer algorithm. And with that, I will sign this off. Have a good day, folks.